Hello and welcome to this week's webinar. My name's Nathan Batcher and I'll be your host for today. So before I begin, I'm just going to read through this disclaimer. Please feel free to read along as well. Beyond Trader LLC is strictly a research and publishing firm. The information we publish is based on our opinions plus our quantitative models, statistical and financial data and independent research. This service is not registered with any financial regulatory agents such as the SEC or any other organization or governmental body. By using our platform or our services, you acknowledge that we do not provide personalized recommendation or advice. Alternative asset classes carry significant risk. Please do your own research before making any financial decisions. Okay, so on today's agenda, we're going to be doing the normal Sunday educational webinar. And this week, I'm going to be looking at cyclical indicators. And I think it's very topical because Bitcoin is having a bit of a pause at the moment. So I think at the moment, there's a possibility that some people are thinking that the market may have topped out. And if the market has topped out, then people are going to start to be getting a little bit nervous about things. So I think today, the whole purpose of the webinar is that we're going to have a look at some cyclical indicators to probably put some assurances to people that the market hasn't topped out yet based on the indicators that I'm going to show you. So as a begin, I guess a good place to start would be the PI cycle top indicator. So this indicator, it's got a 100% track record of calling the market tops. And I think the encouraging thing is, even though we're dropping this Sunday, this indicator is not flagging that the cycle has topped out yet. So we're not seeing any type of indication there from this indicator. And obviously, if we're talking about cycle indicators, this can be very helpful in identifying whether you should continue blindly believing in the price trend. So I'm going to go through a number of these cycle top indicators today. Just based on that one alone, the evidence suggests that the cycle top for Bitcoin is still not in. So this is just the first very basic way how we can look at that indicator in terms of identifying it. And I guess the other thing with this indicator is because it has a perfect track record, it's kind of worth listening to in terms of whether the cycle has peaked yet, just in case that you're worried. Another indicator that I kind of put in my tool bag is the PI cycle high and low. So even though this indicator it's not as simplistic or easy to use as the PI cycle indicator, it kind of gives you a little bit of a view in terms of where the market could go, and also it gives you some moving averages before it starts to flash any signals. So the signals here are normally premature. So if we have a look at the 2021 period, it was flagging that the cycle high was in, although the market, went a few $1,000s above that, but then it came lower. And then we've got the cycle low there, and again, it was just a few $1,000s out, and then it returned. But the really interesting thing here is these moving averages, and we're kind of at the moment between these middle moving averages here that are converging. So there's a worrying thing here in that the potential bull market low could come in with this long moving average around 33,000. It's highly probable that if we break under 50,000, this is the moving average that the market is going to go towards. But I question whether that can be a reality based on the ETF dynamic that's now in the market, and you've got these other participants. However, I wouldn't completely rule it out. And the other interesting thing to me is that the cycle high here is indicated to come in around 99,000, probably give or take, $10,000 or so. So this is interesting for me from a price guidance perspective, but also it's not saying that the cycle high is in, but it's giving us two very definite targets in terms of what happens if we deviate too far from these two moving averages here. If we, for example, break underneath the low, then there's a strong possibility we're going to here. If we break above the highs, there's a strong possibility we're getting there. So these are very interesting in terms of calling the cycles. and they can obviously provide a great future price guidance to us. Another cycle indicator that I'm looking at is the swing momentum. So with the swing momentum, ideally, what we're looking for is these kind of outliers in the market where we see these big spikes lower, and they kind of are generating an idea that a significant market floor is in place. So if we see previously, we'd like to see that this swing momentum is going to be kind of reversing tomorrow, and then we can start to go higher again. So the idea being that the deeper the spike, like the larger the upside is going to be in the market. So this is another indicator to watch out for tomorrow. And I think obviously it can also provide a good indication of just how bad the downturn are likely to be. We're obviously seeing at the moment as we speak, the price of Bitcoin is dropping. Something else that I'm quite attuned to and I'm paying more and more attention to is the cycles that we have in life, whether it be the moon or the seasons or whatever. So this particular indicator here, let's call it the four seasons indicator. So we've got autumn, winter, the equinox, and the midsummer, and so the cycle repeats. So typically, few weeks after these cycles show up, then we get big moves in the market. So if you can have a look at the summer solstice and the midsummer, so the midsummer marked the low, the summer solstice, the market started to drop after that. So now we're approaching the autumn equinox. So I'm just wondering if we move up towards the autumn equinox, and maybe a few weeks before that or a few weeks after, we start to go higher. I think the good thing here is the last autumn equinox, we had a couple of weeks of consolidation after a down move, and then we moved into a period into the winter solstice of going on a lot higher. So hopefully, because we're in a bull market, we're going to see history repeat ourselves. And the key thing is to mix all these dynamics up with what we know technically. So we know technically that we're going to be in for a very hard time if we break underneath the midsummer low and we go towards the suggested area that I just showed you on the chart around 33,000, and a bit of a heads up that the yearly pivot point is sitting around 36,000 as well. So I would say if we can hold around maybe 57,000 this week, then we're probably going to be heading higher again. But if we move underneath this key trend line and the midsummer low, then we're going to be in a bit of a bad period. But I'm kind of hoping that this last autumn equinox period, where we saw lots of consolidation going into that, I'd rather see a range between 60 and 66,000 start to build, and then we move into the next phase. That would be much more comfortable for me, to be very honest with you. So, of course, you know my feelings on these cycles and how they can potentially play out. So, based on what I'm seeing, we could probably see some consolidation, assuming the midsummer low holds. If we're going to compare this to price action, and by popular request, I've got original trail. So original trail, I'm going to work along the theory that the wider the base, the higher the space. Even though this year we did see a move higher, I'm still predicting that based on just how ridiculously long and wide this base is in technical analysis, that gives us a flag that just how much higher an asset class is can eventually go after a massive period of consolidation. So this short-term pattern here, this falling wedge is very bullish. If we continue to hold around these kind of areas, then when the market does head higher, I'm looking around the $2.90 to the $3 level for an eventual move higher. I don't think we're going to see a new all-time high here. I just think we're going to see a retracement towards the $3 level. Maybe the $3.90 at best. That's my honest thoughts on this. Cardano, I think this is going to be the setup. We're going to be trading between these two trend lines. So maybe we're going to see a bit of a drop off next week, then some consolidation. But eventually, I think Cardano is going to peak out around $2.50 during this bull cycle, or maybe up to the next major rally. But I don't see it going any higher than that. To be perfectly honest with you, and this is kind of a lie-in with a Fibonacci extension analysis going towards the $2.60 area is matching up very, very well with what I'm seeing. Is assuming we break out from those recent highs. In terms of Solana, so I've kind of mapped out here some key areas here. I think the next area on the chart is around $1.25. If we break underneath there, it's very dangerous for Solana. If we can move back above $1.45, then the next target is 190 and then 220. And I think here, again, it's aligning with Ikimoku analysis in terms of 125 and at a very worst case, 113 being extended support. And you can see here on the 4-hour time frame, we've got a very nasty sell signal coming up. So I'd really like to see those lows holding and we kind of start to reverse from around 125. That would be my ideal kind of scenario. I do have a question here. How do I think the market will react if the fighting starts break out in the Middle East? It's very difficult to predict those type of things. Previously, it's even acted quite positively. To be honest with you, I definitely we need to see whether that crypto is going to break the correlation with the stock market next week. If crypto can break that correlation with stock market, it'll be a very good sign. If it continues to follow stock markets lower, then I would personally say that it's going to be very bad. And if you do have some spare capital, you might just want to keep what I'm bearing in mind about buying around 36 to 33 if we do see a breakout underneath 53 and 50,000. Okay, so thank you very much for joining today, and I look forward to seeing you again on Thursday.